646 covers. Yeah, good morning, everyone. We are seeing uh, good corrections in across the market, whether it is US, Asia, any of the markets. Uh, the decline in the US was triggered by PMI number, ISM manufacturing PMI number, which came substantially lower than the expectations. It came at 46 point. It came at 46.8 versus expectation of 48.5. Expectation of 48.8 and last month 48.5. Anyhow, PMI number in below 50 indicate decline. And in that decline, the decline which came in for the July month was substantially lower. And that has created the question mark about whether the US can still enter into recession in the coming period. In the last four cycles of interest rate decline of the US, we had seen that US economy enter into recession or their economic decline comes down. And the similar thing can happen again as interest rates cuts are now coming. Generally, other way around is correct that the economy is coming down at such inflation come off and US Fed reduces the rate. So that scenario has come up on live, and we had seen corrections in the US. Even Asian market has also seen substantial correction, mainly led by US. And if we see the sector which is declining is semiconductor or IT related sectors are declining more. Japan is down by almost around 5%, which is substantial for the Japan. Apart from that, some news on the geopolitical tension also, wherein Lebanon has fired a lot of rockets on Israel, and that has created uncertainty about whether the Israel will be having a counter attack on Lebanon. Indian embassy has asked the Indian to leave Lebanon. So this is also has created some uncertainty in the Asian regions, and that is having some impact on the even the market as well. So overall seems a bit dicey day. We may see some corrections in the Indian market as well because of this in the uh, today's trade. Apart from that, if we see the commodity has not seen any up move. Even with the Lebanon impact, the oil is has declined. It has come off by around $1.5. Aluminum, copper, iron ore, steel, all are indicating downturn in today's trade. So that sector will also see some pressure because of that. And I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. After global Q, today we expect gap down open. Already Nifty trading in overbought zone, and we saw that the market already trading in upper range. And any panic situation, it will come down towards 24,770, and this is main the important support for Nifty. If Nifty break 24,770 and will close below that weekly, Then we expect further sell-off, further pressure, selling pressure increase towards 24,600 and below that 24,400 at downside. Upside again, 25,000 and 25,140 is a next major resistance for Nifty. But today we expect gap down open and we closely watch that 24,770 if Nifty managed to sustain these support and first half. Then we see the sideways momentum during the day. But if Nifty first half trading below the 24,770, then this pressure extend towards 24,600. We closely watch after gap down open. Bank Nifty also trading in upper range and in any negative side news, Bank Nifty also drag towards 51,300 and below that 51,000 and 50,900 next major support for Bank Nifty. Upside again 52,000 52,300 is a major resistance for Bank Nifty. Fin Nifty also trading upper range, so we expect some profit booking in higher end. Next immediate support place around 23,400 and then for 23,300 at downside. Upside 23,630 is the first immediate resistance. So all three index we expect gap down open and first half an hour we closely watch this immediate support if Nifty manage and trading sideways. If break, then we expect throughout the days a selling pressure to increase and maybe next week carry forward this selling pressure. Stock specific, Concor looks weak. So already, we given a sale call yesterday in Concor. We expect the towards downside around 1,000 and below that range, in downside. To expect negative side in Concor and. PNB also looks weak in PSU Bank. Yesterday closed below the 50 DMA. So we expect again pressure increase in PNB towards 110, 112 at downside. Upside 124, 128 is the first immediate resistance. PEL also trading in overbought zone. Do we expect some profit booking in upper side? And again, drag towards 960, 970. To all three stock in negative side, we expect some pressure. Positive side, we given a high tech in mid cap counter. We expect above 150 this momentum to be positive 178, 180 and upside. Second, Tata Chemical, we also given a buy side. So we expect these two stock in positive side. That's it for technical derivative.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you have seen that in yesterday's session, GIFT Nifty was opening almost around 25,100 level, but it failed to manage about that level. And in the closing basis, we have seen that the Nifty was continuously on the selling front towards the 25,000 mark, where it was a breakout of break-even zone for the market. On 25,000 level, we are seeing that continuously called at and put at the positions are intact, and the positions are not getting shifted heavily. As I said yesterday, that once if Nifty manages to get stable about 25,000 mark, 25,050 level, then after that we might see some liquidation on the call rider front. But Nifty give closing near 25,000 level only. And in today's session also we are seeing that the support for the Nifty lies at 24,800 level, where the support for the weekly basis on the put writer will hold the supportive zone, and on the monthly basis 24,600 will act as an important supportive zone for the Nifty front, where the shifting of the position will take place once if 24,800 level gets broken out on the closing basis. While on the immediate basis, we are seeing that once if in today's session in second half, if Nifty managed to give go about 24,900 level, then again we might see some stability in the market. But if in closing basis 24,800 level gets broken out, then in next week we might see some selling pressure to be continued again. While PCR yesterday closed at 1.29 level, PCR is still at a stable zone. What if in today's session, if PCR goes below 1.08 level, and even if that point of time Nifty goes below 24,800 level, then we might witness some fresh short position to be initiated in the market. So currently view seems to be on the negative front, to some cautious zone in today's first half of trading session. So we will closely watch for the first half of trading session. If stability comes about 24,900 level, then again we will hold with the buy call recommendation, or else we might do some profit booking and shift on the fresh short position towards the 24,600 to 500 zone on the lower end. While on the stock specific front, the counter that looks positive in today's session will be Chambal Fertilizer, Adani Enterprise, and Dabur looks positive. While on the negative front, India Mart, Trent, and Tech Mahindra looks negative in today's trading session. So that's it from Better Front. Thank you.
Good morning. On the result side, Aptus Value Housing Finance result has improved. Loan book grew 4% sequentially, 27% year on year. Profits increased 5% sequentially, 21% year on year. Asset quality was stable. With the reintroduction of the PMAY CLSS scheme in this budget, we expect some improvement in disbursement growth rates across affordable housing finance companies. So that's why we continue to remain positive. Suryoday Small Finance Bank result has improved on all fronts. Disbursement growth was 46% year on year. Advances growth 34% year on year. Profits grew by 46% YOY, 15% QOQ, and ROA also improved from 2% in March quarter to 2.2% in June quarter. GNPA was stable, and yet company provisioned aggressively to take net NPA down from 0.9% to 0.5%. With this, the PCR has increased from 71 to 84%. We are positive in long term on the company. However, despite this decent results in this quarter, when we see results of all other microfinance companies and SFBs, we can clearly see that there is serious deterioration in asset quality, particularly in the MFI segment. So that's why we would, overall adopt a cautious approach, keep the stock in radar, but looking at the sector headwind, plus there are many state elections coming, over next few months, including Maharashtra. So that could act as a sentiment dampener for this whole sector. So one can just avoid the stock from a near-term perspective. Repco Home Finance result is marginally above expectation, owing to slightly higher other income and muted OPEX. Profits grew 18% YOY and were flattish QOQ. However, loan and disbursement growth remains sluggish. Loan book growth was at just 8% year on year, flattish QOQ. Disbursement growth was also flat YOY. So we have been hearing the management of Repco since many years that they are targeting loan growth of 13, 14, 15% coming a few quarters, but that is never happening. And so we continue to remain disappointed with the result, and that's the reason that stock is still available at one-time price to book, despite of having ROE of around 13%. So we remain neutral on Repco Home Finance. Today, IPO of Ola Electric is opening, and it will close on 6th August, that is Tuesday. We have given subscribe rating. Issue price is 76 rupees per share. Market cap post issue on IPO price will be 34,000 crores. Total issue size is 6,150 crores, comprising 5,500 crores from fresh issue and 650 crores from offer for sale. Ola is a pure play electric vehicle two-wheeler company and is at the #1 spot with 35% market share in FY24. If we look at Q1 this year, then market share has further increased to above 40%. EV two-wheeler penetration in India is currently at 5%. That is, out of total two-wheeler population of 2 crore units, around 10 lakhs is that of EVs. Industry experts believe this penetration will increase to anywhere between 30 to 50% over next 5 years. So this will translate into very high growth rates for the EV two-wheeler industry as a whole. And Ola is ideally placed, being the #1 player over here from this trend. So further, Ola is also the only EV two-wheeler company to have its own battery manufacturing plant for captive use as well as outward sale. So battery cost comprises 33% or 1/3 of the total two-wheeler EV. So this will help Ola in participating in a larger value chain as well as give it better control on operations and costs. On the concern side, if you see, there is a lot of competition with 14 serious players competing for market share in the EV two-wheeler space, and all are currently burning cash. If we compare it with the traditional two-wheelers where there are just 7 players and everyone is making decent margin and ROC. So we think that until there is consolidation in the industry and weaker players are bought out by incumbents or by ones having deep pockets, the industry will keep bleeding. However, considering that the company is a leader with huge market share and also a pure play proxy on EV theme in the listed space, it will continue to command premium valuations, even post listing. So if we look at EV2 sales, the company is made available at 7 times EV2 sales compared to listed two-wheeler companies, the traditional ones who are trading at 5 times EV2 sales. So that's why we have recommended to subscribe to this IPO. Thank you.
Good morning. On the FMCG front, ITC Limited posted the results and results were below expectation. Revenue grew by 7.4% on a YY basis. The overall gross margin for the quarter was down by 180 basis points on a YY basis, and sequentially it has down by 220 basis points. EBITDA margin reported at 37% versus the expectation of 38%. We are neutral on the stock given the recent rally where it has grown by more than 15% in the last 1 or 2 months, and it was on account of absence of any change in duty in the budget. Dabur India Limited posted the results broadly in line with expectations. Revenue grew by 7% on a YY basis. Overall volume growth in India business stood at 5.2%. The volume growth has been consistent over the last 2 to 3 quarters, which was in the range of 3 to 4%. And the management has highlighted that the July demand has also seen the same trend. However, it has seen its ability to increase the prices has gone down. The Dabur expects the rural demand to drive the growth and good performance over the next 2 to 3 quarters. Company has improved its gross margin by 120 basis points, and EBITDA margin is reported at 19.6%. The management continues to highlight market share gains across 90 to 95% of its portfolio. Also, the management has highlighted that part of the benefit from the improvement in gross margin is expected to invest behind the brands, and the rest is expected to move towards the operating margins. Thus, the management guides for the operating margins to be greater than 19.6% levels. The stock is trading at a PE of 50 times to FY26 EPS, and we have a positive outlook on the stock. On the chemicals fronts, Clean Science and Technology posted the results marginally below expectations. Revenue grew by 19% on a YY basis. Overall growth was led by volume growth. The management believes that the realizations have stabilized and are not expected to rise over the next 2 to 3 quarters. On the operating margin front, the EBITDA margin reported at 42.3%. The management has given the capex guidance of 300 to 330 crore in FY25, and it has incurred the capex worth rupees 100 crore, which was towards the pharma intermediate product, which is expected to be commissioned in Q3. Also, the management expects 2,000 metric tons volume for FY25, where it is currently producing 125 metric tons per month. Also, the management expects the scale-up in production will bring efficiencies at operating level, thus will improve the margins. The stock is trading at a PE of 42 times to FY25 EPS, and one can accumulate at these levels with a long-term positive outlook. Thank you.
Hi everyone, good morning. Tata Motors results is in line with expectations. Consolidated revenue from operation declined by 10% QOQ but grew by 5.7% YOY. EBITDA came at EBITDA declined by 9% QOQ but grew by 15% YOY. EBITDA margin came at 14.4% versus expectation of 14%. PAT is in line with expectations. In JLR, revenue and EBITDA in line with expectations. EBITDA margin came at 15.8% versus expectations of 15.6%, and PAT is above expectations. Company is launching new Tata Curve on 7th August, and the company maintains a significant market share driven by demand for their vehicles, particularly evident with the Tata Punch model, strong sales performance. Sales of the Range Rover and Defender models are at an all-time high, contributing to a strong product mix. This trend indicates a shift in consumer preference towards the luxury vehicles. In commercial vehicles, challenges arise from supply chain disruptions due to flood affecting key aluminium suppliers. The deployment over 2,900 electric buses and the introduction of new EV products reflect the company's commitment towards sustainable transportation solutions. In JLR, the financial performance shows strong revenue growth. The company's wholesale and retail performance by region shows impressive growth, especially in USA and UK. JLR investing heavily in engineering with a focus on launching new products, particularly in China market. Current market demand varies significantly by geographically, with Europe facing challenges, with the US market remains strong. And July month auto numbers for two-wheelers and commercial vehicles are broadly in line with expectations. For three-wheelers and tractors are marginally above expectations. For passenger vehicles, numbers were below expectations. If you look at the company-specific data, company-specific numbers, then Maruti Suzuki, Tata Motors, and M&M Auto sales were below expectations. Maruti Suzuki declined by 4%, and Tata Motors declined by 10% YOY. M&M tractors and Escort sales were marginally above expectations. M&M grew by 8% YOY and Escort grew by 4% YOY. Ashok Leyland and Eicher Motors sales were in line with expectations. Ashok Leyland declined by 8% and Eicher Motors grew by 13%. In two-wheelers, Hero MotoCorp and Royal Enfield sales were below expectation, but TVS Motor sales were marginally above expectations. Hero and Eicher declined by 6 to 7%, and TVS grew by 6%. Thank you.
Apart from this, a few more results wherein Intel Corporation came up with the numbers, and numbers were strong. Company has shown good growth year on year, increased by almost around 20%, and EBITDA margin has also shown uptick, came in at 18.5% versus last year 15.7%. So overall result seems quite attractive. Though valuations are at around 45 times FY25 earning. Then Tata Steel had a con call yesterday, and the outlook seems neutral from here, though company has talked about increased production in the current year because of the expansion which is going on at the Kalinga plant. which will have a volume growth of almost around 2 million ton for the company. The near-term outlook, though the costs are also coming down, but the realization has come off substantially in the recent past. So near-term, the pricing pressure will impact the margins. At best, company can do similar margin to Q1, or we may see even decline also. The coking coal cost will be coming down by around $25, and iron ore cost is also coming down, but the decline in the price of the finished metal is higher than the combined decline of all these two factors. So overall seems outlook for the Tata Steel in near term is neutral. So that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting gold and silver prices to pull back. However, prices have already opened, gapped up. One should wait for a correction and then enter. On upside, gold might resist 70,500 to 700 on the upside. So take profits around those levels, and one can enter long around 70,100 with a stop loss of 69,900. In silver also, one can buy around 83,300 with a stop loss of 82,500. Yesterday, it had witnessed resistance testing 84,500 on the upside. So 83, 800, 84,500 is the levels where one should expect profit taking. In crude oil, we might see a pullback today till 65.20, 65.50 on the upside. Then again, selling pressure could be witnessed. So one can buy around 64.30 with a stop loss of 63.70, and on pullback again sell around 65.80 with a stop loss of 66.50. In natural gas, if prices are sustaining below 165, then we expect further correction till 158, 150 on the downside. So if prices sustain below 165, then sell or wait for a pullback till 170, 172, then sell with a stop loss of 180. And in metals, we are expecting prices to correct. Copper is expected to test 780 on the downside. So sell on rise is the view. Sell around 797 with a stop loss of 803. And zinc sell around 252.50 with a stop loss of 255. On downside, it can test about 248. That's it from us. Thank you very much.